Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. Welcome back, guys and girls. I hope that everyone has been safe yesterday. The video I posted last time was on macroeconomics, and the one before that we've kept pushing on the bearish narrative as we've been doing for the last couple of weeks since 47k. So hopefully whatever happened yesterday in the market didn't hurt too much. I want to start out with the S&P 500. It's because it's at a crucial level, and since BTC has been very correlated to it, it's important to discuss it, I guess. Then we're gonna jump to BTC, where we've pretty much reached all the targets that we've been talking about for a couple of weeks now. So we're going to be talking about where I think how to handle this situation, because you've closed the trade and then what's next? Do you jump into a new trade straight away, or how do you handle the uncertainty, or do you just stay away? I'm going to talk a little bit about that. We may jump into a little bit of the Luna drama, but I think it's covered well enough everywhere. I'm just angry that I didn't go full short on because I talked about it in the last video, called it a ponzi. It was at resistance, and then, well, go watch it again, and you'll see what I said. Axie's been coming down like a rocket, so that kind of, that trade is still open, but challenging in the way that I don't know if I want to close it early or not. But downside targets are not met yet. Kyber network, we blew that one out of the water, so I'm going to talk about that, and then I'm going to end with the dollar, gold, and maybe some talk about rates, and that should conclude it. Tomorrow is I think we're going to get CPI numbers, so we should also be careful that those numbers are going to probably move markets in one or the other direction. And then the S&P 500 is basically, so it closed yesterday, the daily, below the 4,000 level, and there's a bunch of, well, this is a critical level. There's a lot of puts and a lot of calls basically at the 4,000 strike. Anywhere below that, there's no significant calls in the money. So I'm kind of eyeballing this, because if we start significantly losing the 4,000 level, I do think things will accelerate to the downside. And what I'm looking at here is we had this, so identify a few things. Here is the last pivot that brought us to new all-time highs. And then this move is the first impulse after we started. And then after that, we started to consolidate, okay? So this thing here is the corrective structure. And the corrective structure is now finished and broken out. There's a possibility that this is still part of the corrective structure. So basically 1, 2, 3, and then not just end with 3, go like 4, 5. I just don't think that's the most probable in this case. This was just very clean. And then the other thing that came to mind is, we kind of left this gap behind. But we tried to trade into it like once, twice, 3 times, and got rejected pretty hard. So there was somebody here kind of selling hard into it, and then I'm coming back to this low here, right? This low here was our last low into new highs, into higher highs. Kind of feels that this rejection here confirms that market wants to trade below it. Confirms to me, in my opinion, that this was the corrective structure here, and that this is the next impulse down. And I don't think that is just gonna, that this little bit of traveling is enough. So assuming 4,000 is important key level, think we're gonna break it. And then obviously where are we wrong? We're wrong when we get acceptance above here again, and then trade back into this level and fill the gap here. This is a huge liquidity. There's going to be a lot of liquidity up here, so there's going to be a lot of people like covering and probably get a reaction back down, but I don't think that's the most probable outcome. So just let me quickly delete. Come on. There we go. Let me quickly delete this and go back to the 3-day. So remember the hammer continuation. And then the other thing in terms of structure is there's this gap here, right? So consolidation structure here, expansion, and then price never managed to come back into it until now. So that's also why we're seeing a bunch of covering. And if I drag a fib into where we're now, like around 4,000, right? That kind of is mid-range to some extent, which I think if we break below this, we got ourselves a new range somewhere like this, with the midpoint, slightly not the midpoint, but there's lows here, 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 and here at the gray box. That I do think that that's the first next target where market is going to then see some kind of relief bounce if we manage to lose 4,000. And then I do think if we lose this, then I think target is going to be pre-COVID crash high at the least. And then there's these wicks down here where I think there's going to be covering happening. Okay, so that's my outlook on the S&P 500, and we've seen the correlation is extremely high, which is scary to begin with, because I don't know. In the past, Bitcoin has shown correlation, but not as much as it has shown for the last, I don't know, year or so, which is pretty scary to me. So Bitcoin, it's, we've kind of reached all our levels to the downside that we've been drawing for quite some time. So this is, obviously a good place to start covering those shorts, and maybe even buy some spot. The problem is, in my opinion, is a few things. So first resistance here is the 33k mark, which would kind of possibly deviating on. The other thing is that if price doesn't manage to reclaim share, we got this entire range. There's a lot of people who always say like, oh, you got to trade the W's because that's bullish. Well, guess what? This is a W, a giant fucking W. If we start losing that, maybe you get some kind of price action like this, below the lows here. If that happens, fine, we'll see that happen. But I'm kind of stuck in figuring out whether I want to long this or not. I do think that if the macro is just going to contract further, this is going to start losing levels, and then this is just a giant distribution, and that just scares me. And okay, I get it. Scared money doesn't make money. But you gotta, I don't know, like, there's clear invalidation down here, but at this point, we're so close to it. I'm not gonna long this, knowing that there's So, okay, let me grab this. I'm not going to long this knowing that, you know, there's a bunch of lows sitting like a couple percentages away, being ready to be taken. So I'd rather, you know, wait for those to get swept and then, you know, you see proper confirmation that we're trading back into this range. You know, and we could probably see like even like T's like 2, but if you don't see any continuation after that, and then, you know, you reclaim, quote unquote, where people are panic shorting and selling whatever, that's where you get like this giant convexity upwards, reflexivity, I don't know what they call it, blah, blah, blah. But I'm just, you know, like, okay, maybe the market is front running me here and everyone's waiting for these lows to be swept. And maybe these lows get swept and we just dump straight down here. I'm not gonna bet on either outcome. Like, so the other thing, and that's where I think, you know, that makes more sense, is if we look at where we started selling off yesterday, where the volume came in. So this is where, you know, a bunch of makers got filled, other people got filled, we would never go lower, yada, yada, yada. And then here, volume kicked in, right? This candle. Maybe it's even cleaner. Yeah. So the hourly is pretty clean. I do think that, you know, you got a bunch of levels, but this is where the acceleration happened. So if price manages to go above this, hold, that's bad for shorts, right? It's probably going to trade back down here again, but that shows that there's enough pressure from the market makers who got filled here, who are looking for an exit, and they're most likely trying to exit here. So if we push through that, then there's, you know, there's systemic buying into those market makers covering the other side of the trade, if that makes sense. So before we continue, guys, if you appreciate these videos, I want to get your attention for sponsor Prime XBT. They've been sponsoring these videos for quite some time, and it would help me out, it would help them out if you consider signing up using the link in the description below. And if you use promo code Bitcoin Jack after you sign up, you'll get up to 0.25 BTC, which I believe is like $7,000 or $8,000 right now. What am I saying? Let's see. 0.25 times 31,500. That's almost 9K. So, yeah, I mean, you would do me a giant favor, just to, you know, if you'd go check it out, register, deposit a little bit the money, just trying to platform out. Let me know what you think about it, if you like it. Yeah, you know, thanks Prime for sponsoring and making these videos happen. Bam. So that out of the way, I do think that, you know, it's kind of, we gotta see those, you know, this volume ramp up into past the point where these market makers are trying to cover the other side of the trade. There's actually, if you look at Phoenix, for example, and which was pretty clean, we've had, you know, market makers taking the long side for quite, you know, all the way down, and then they stepped in again here. They must be balancing their book. If buyers manage to, you know, knock them over, then there's I do think that this is going to rally higher. So if that happens, where do we rally to? Good question. Let me remove this. So I think the summary to what I'm saying is that, you know, just, is this decapitulation? Is a 10% move yesterday decapitulation we've been looking for? I don't think so. Does that mean the bottom isn't in? I don't know. That's I'm not gonna say it is or it isn't. I just wanna see price show some strength before I get in here, because there's all these wicks here. But yeah, I mean, if there's rallies, I would assume it's at least going to rally into retest of the monthly and probably just trade a little bit above it. So we had two places where price accelerated. One's here and one's here. And there's a bit more logic to it. So you see this is where the last kind of bias stepped in. So this is a defense spot, that's a defense spot, and then there's another defense spot down here which correlates with the monthly. But I do generally when you interact with the monthly retest, it tends to just go above it, trigger stupid algos or FOMO traders. So I think this level is more interesting, and this deviation here kind of makes it clean. So if this rallies, it's going to go up here. That's where I'd head short once again. And then if it kind of shows a weak leading structure down here, then there might be an opportunity to upside. That's just too far ahead in time to say that, but that's the summary here. So let's drag this one up here. If price manages to trade into here, blow out the market makers balancing their book here, I think price is going to retest here, because there's going to be more balancing of books, and otherwise up here, which is all the way back to 40k. Okay, but I'd look to hedge here, maybe slightly higher, but that's kind of the area I'd be looking at. And to the downside, like I said, I'd wait at least for this to sweep and show strength, instead of just blindly longing it at the wick. And then, so the other thing, if you're aggressive about this and you think those market makers are going to protect it, really short, is short to be taken is up here. And then, I think if you get rejected up here, I think that's heading into 25, 26, 28. So yeah, I mean, I wait for a little bit of a structure up here or up here, where you can find a short entry if you want to play the short side. Really, at this point, it's up to you. I'm just going to be sitting in my stables and waiting if I see an opportunity. I'm not really seeing it right now. Maybe the aggressive trade here is the trade to make, but it's kind of weird for me to do it at quote unquote monthly support. So I think I'm personally just gonna let this one rest. No net short position. All right. Think I talked almost 20 minutes just on two things. Well, and ETH, it just doesn't want to give up. Like, it hasn't closed below the levels and retested it, and it's back into the blue box, coming back into the diagonal. So I don't know. Like I said on Twitter, I'm honestly confused why the hell this, hasn't broken back down into this range. I guess there's still people buying this stuff. Crap. I didn't say that. Yeah, so, the whole Luna drama, I'm kind of, angry. I didn't have more balls here and do my thing. Would have been a bazooka short, right? Anyways, this was probably the low for a while on Luna, unless something really bad happens and Bitcoin starts puking very bad and Do Kwon has to liquidate all his Bitcoin or gets, like the way I understand it is that they pushed BTC to OTC and institutional partners to market make the UST peg, and that they probably did that in a loan structure. So unless something goes terribly wrong, I do think that this won't go lower. I'm not saying long this because holy shit, this is just a giant clusterfuck. And mind you that UST is still trading at a discount. It hasn't recovered from its peg, and it's just mind blowing. At one point it traded like 40%, 40 cent below the dollar. I don't know. He fucked up, in my opinion, badly. Right? Axie. It's been a lot of action on Axie. This, when I think this is when I first started talking about it. That's over 60% down. And like I said at the beginning of the video, I'm kind of contemplating whether I should cover, because you see there should be some resistance here. But I'm just gonna hold this to these levels. Hopefully that's not the wrong thing to do here. So that's an update there. I don't know. I feel like there's no reason to believe this is reversing yet, just judging by the price action here. Maybe there's some consolidation. Did the same thing here. Something could happen in the markets. Generally the macro just doesn't favor. The macro just doesn't favor any risk asset at the moment. And if you still don't believe that, go watch the Great Hike video. It's an hour long, me rambling about how the stock market is fucked, and Bitcoin probably too. So that oh yeah. So KNC, damn, I'm not gonna long this. So just to put it into perspective, resistance here. I'll just shortly explain why I deemed this resistance. Last consolidation into last impulse up. There was support here. There's the structure here. This was just also this was just a giant rally. A lot of strength while Bitcoin wasn't particularly strong. So it kind of put me off why I was doing that. Made sense that this would just have to reject. This is where you cover. And it kind of reminds me what we've seen here. So I think some bouncing and then just puke it and then just go to the range lows here, right? Oh, that's an ugly squiggly. Let me redo that. So let's say this bounces up here and then comes back down here. I do think it's gonna go to the range lows. Let's to, yeah, like that. Okay, do you think that's going to happen? I don't, especially in current market conditions, unless, tomorrow something really weird happens, I don't think this is going to go all the way up there. Lower, 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 bam. Like something with a I don't know how to say that word, but, some roller coaster where you die. Gold. I think we need to talk about gold. Somebody asked me to talk about gold. I think I need to get the daily. Okay, so gold is a complicated trade, but generally, okay, so there's a couple of things. If real rates go positive, that's probably gonna pull some liquidity from gold, right? So I think that's what we saw happening here. And the other thing is, a strong dollar is not gonna help. We talked about, the role of the dollar, and I do believe that we've come to a point, and again, I'm referring to the Great Hike video. I've come to the point that I believe that the United States has to defend the dollar. Okay. So if that's the case, then the other thing that we need to look at, so for example, tomorrow's CPI print, that's going to be important. And then, how yields on bonds are doing. That's all going to be important for the gold trade. If I'm correct that inflation is not going away for a while, rates are going to keep going up, the dollar is going to keep, quote unquote, strengthening, they're going to keep raising rates the next couple of meetings, and I think they kind of said they would, like 50% of 50 basis points in June, and then 50 basis points the next one, and then maybe after that go back to 25 basis points. Then this consolidation here may get a little bounce, but the next big level would be just below 1800 in my opinion. And if I look at gold, I don't like how it traded below this, and I don't like how it traded below this. Okay, you can say it's finding support here, good. But I would have, for to have a stronger bullish bias to this, just losing this one was something I wouldn't like to see. So yeah, some support here, but also resistance up here. We're kind of seeing the rejection occurring in front of our eyes. So I'm just not. I don't see any reason right here, right now. Even if Russia is gonna back their ruble with gold, fine, they can do it. They probably already have a lot of gold compared to what they own. And then it's gonna be the ruble. They're not gonna trade in gold itself. Maybe they print more rubles, they will have to buy more gold. Sure. But I think they already did that now. They're kind of announcing it. So yeah. I think this remains bearish in my opinion. Dollar. Everyone's been, screaming at every rip of the dollar. Oh, dollar is, super expensive now. It has to come down. And then Bitcoin is going to rally. Well, it's unlikely this is going to, come down anytime soon until the European Union announces they're going to do some very aggressive hikes, or, even mild hikes may actually create a little bit of a pullback. But the fact is, the US, the Federal Reserve, is hiking and tightening much faster than the EU. The EU is still loose. Okay, so there's still liquidity flooding into the EU, and there's no liquidity flowing from the US anymore. And then we have the Bank of Japan, who's just throwing money at the bond market to keep their peg. Again, you know, go watch the Great Hike video. Bank of Japan, where is it? Come on. They're just like trying their absolute best to keep this peg in place, and you see they're not really getting anywhere. Which is the main driver behind the weakness of the Japanese yen. And then obviously China is not really doing a great job either at, you know, look at how aggressive they have been on injecting liquidity into their markets, which caused this entire rally. So, you know, you got a bunch of like big markets, the EU, China, Japan, flooding their markets with liquidity, and then on the other side of the world, you got the US, who's, you know, tightening aggressively. I don't know what kind of mental gymnastics and loops you gotta like work yourself through to think that somehow bearish for the dollar, but yeah, I don't know. It's mad people actually think, you know, the dollar is gonna come down anytime soon, unless obviously policies change. But for now, the way everyone's behaving, dollar is bullish as fuck. And you know, I wouldn't be surprised to, you know, if it eventually goes higher. So yeah, bearish gold, bearish everything. If you think about it. And can Bitcoin decouple? Maybe, but I'm not gonna bet on it until I kind of can prove it. And right now, I think the evidence is against it. Okay, that's a lot of rambling. 32 minutes. Hope you enjoyed that. Let me know if you enjoyed that. Let me know if you have any questions. Again, some special love for Prime XBT. They're sponsoring this video. They're making it happen. So, you know, go check out their exchange through the link in the description below. And, you know, if you like it, sign up, use the promo code BitcoinJack, and you will get up to $9,000 in deposit bonus. Cheers, guys. Catch you on the next one. Bye.